What's happening, people? Okay then, so we've had our break, all right? We've come away from the charts for a great 24 hours, but we have to get back to business, ladies and gentlemen. Why? Because guess what? There will always be a market. Someone will always believe that they are going to exploit price from one point to the next. And this is what the hybrid system is. This is what pattern watchers do. We watch patterns, we wait for moves, and we exploit those moves. If you are new to the channel, usually what happens is there's a big button that's red and it's got a bit of white writing on there that says subscribe. Feel free to press it. It doesn't do anything magical, but it just lets you know when I go online or if I update the system with a video, you are notified. So it's a great system. All right, so that way you're kept in the loop about things. But anyway, jokes aside, forget that. What's the purpose of today's video? Well, if you are new to the channel, my name is Tina. I'd like to welcome you to Traders Reality, and we talk about how to exploit the markets. Okay, and we use the hybrid system. The hybrid system is made up of two systems, okay, and we've joined them together to effectively take the key aspects of each system and use it to exploit what we understand to be the market maker's behavior. Okay, if you want to know more about that, watch the previous streams. It's as simple as that. So what's been going on? Well, look, the purpose of this video is to help you understand why bull flag patterns are traps and help you understand why every move in the market is a trap. Okay, so let's take it back, ladies and gentlemen. And let's talk about what was going on with Bitcoin when it came away from this beautiful W formation. Now, the first instance was this, okay? You can see that we've got ourselves the potential for a bull flag setup. Now, most people may have traded this. Now, the key thing with this little play right here, ladies and gentlemen, is those people who traded off the bull flag had drawn the lines, as always, okay? And they would have marked up this triangular formation, and then they would have anticipated price to come to the upside and break that triangular formation. All right, so if I just bring it over here, and I'll make life a lot more easier for you, I'll just reverse price back and start from, let's start from here. Okay, so here we go. This is what most people using bull flags, all right, actually done. And it's quite sad really, because a lot of people may have lost a bit of money, okay? Now, we would understand the bull flag to be like so. It would take a pole, all right? And then, of course, it would take a triangular formation like so. And the trader would be waiting in anticipation for the actual flag to play out. Now, you can see how many times the people that may have drawn these bull flags may have been thrown about left, right, and center. Now, remember, each bull flag that people trade is different to everyone else. You have the bull flags on the 1 minute, the 5 minute, the 10, the 15, the hourly, the 8 hour, the 4 hour, the daily, the monthly. Okay? Now, usually the principle says that the higher time frame will give you much more of a conviction and solidify a move from a zone. Now, ladies and gentlemen, the hybrid system is designed for short-term day trading purposes. That's not to say it can't be applied on higher time frames. The specialty of the system that we talk about today focuses on short-term day trading purposes. All right? You can use it on higher time frames. Just things take a little bit longer. Okay? My nature of trading is I'm a scalper. So I'm always looking for action. I'm getting ready to get in and get out at the same time. That's why I set myself up to never feel like as if I'm missing out on anything. Why? Because I know there will always be a market. I know that I'm able to exploit at any moment in the market. So just look at the impact that the bull flag has on retail traders. This area here is where traders get messed up. They're anticipating a break higher. Now, don't get me wrong, guys. I may not be that articulate with the bull flags because I don't use them, okay? But I'm fully aware of their presence. I'm fully aware of what the market maker is doing. I know for a fact that market maker is he pays so much attention to this pattern. All right, because he knows that's where liquidity is trapped, which is why it always forms the structure of what would appear to be a flag. Okay, and every time it does that, traders are drawn towards it with the belief that it's going to break out to the upside. Now, we have seen a few of these plays in many altcoins. All right, we've seen it happen many a time. Some people have seen success, some people haven't. But what the thing is about this is this: when the bull flag is present, people are expecting a breakout to the upside, which is why you tend to see fake breakouts like so. But the retail trader is committed. He would have put his money in. Look, a bull flag, whatever way you would have decided to draw the flag, because there are so many ways that people would have drawn it. They would have drawn it from here down to here, like so. You may have got another one where they would have drawn from the bottom here and they would have extended it out to here. And they would have been trying to create this self-fulfilling prophecy of the idea that at some point this flag is going to break out. Okay? But the problem that we've got is this, ladies and gentlemen. When it does break out, what does the retail trader do then? Yeah? Because principally, the flag broke out. Happy days. You would have gone long. But then you also would have been stopped out. Now, with the hybrid system, you would have seen that, okay then, if I'm going to use the bull flags in relation to the hybrid system, what would be my signal? Well, let's look at it like this, ladies and gentlemen. We've got this big green vector candle coming to the upside, and there's a failure at the green vector. So we know that at some point, they're going to try and work this wick. But the fact that it hasn't followed through tells me that something is wrong. We need to look at where we are in the chart. Are we above key notable areas? Well, what numbers are we at? We're at the 49k zone right there. So is the market maker preparing to build shorts? Because what you need to understand is this, ladies and gentlemen. This move out of the zone right here is shifting out of the zone in terms of the W formation. Market makers have accumulated all the orders in this area, made the retail trader believe price is going lower. He's induced them to believe there's longs coming into play. He initiates a stop hunt low. He forms a second leg of the W. Volume steps in, and then they shift out after trapping all the liquidity in this range right here. Okay? So market maker has realized the return on his investment. Now he needs to start doing it again. What does he do? He needs to induce traders to keep liquidity committed into the chart, because the retail trader that missed out on the move to the upside right here is thinking, oh, okay, it might actually happen again. So then he gets back in again. The market maker makes him believe that now everything is actually moving to the upside. What you also got to understand as well is the influence that YouTube across the board has. You know, news articles, people who have a position in cryptocurrency. I mean, even then, people that are in the position to talk about cryptocurrency or have any precedence in the concept of cryptocurrency aren't really talking. It's just people talking about cryptocurrency, and everyone that keeps talking about the same thing is going to lure many more people into believing that that is true. Just because many people are talking about it doesn't mean it's true. Market maker exploits on this basis, ladies and gentlemen. He does exploit on this basis. Because remember, the only way that he's going to get people to commit to the charts is if he provides liquidity. Take the book map. Everyone is on the idea that the book map is full of spoofs. Yes. Now, a spoof is a fake order that comes into the order book. Well, guess what, ladies and gentlemen? Whenever you see more spoofs, it means that there's less liquidity. It means that they want people to commit to the charts. The game is designed to trap. The game is about getting you, as the retail trader, to commit liquidity. That's all it is. And the idea of you committing liquidity via the tools that they provide, leverage, is to get you to put money up. They borrow money for you. And then you're sat with a certain position and you're seeing it going in profit. You're not paying yourself. And then the market maker takes his cake. He takes his cake, as they would say. So looking at this sort of play right here, ladies and gentlemen, a lot of retail traders would have been shaken out. You can see that bright as day. Stop hunt rise, I'll go long now, forget it, cool. It comes all the way back down. See, as the hybrid system, you would have understood that the green vector candle would be realized because there was failure to continue higher. So you would have waited for a confirmation candle. If you were going to trade this bull flag on the principle of the hybrid, if this green vector was the candle that was going to send price higher, you would have waited for the next candlestick to come in and show an aggressive move out. That would have solidified the bull flag pattern. Now listen, I am not saying that the bull flag pattern is wrong. What I'm saying is the bull flag is a trap. Sometimes it works, sometimes it doesn't. What I'm trying to get across to you guys is to help you become mindful in line with the hybrid system when you should consider using the bull flag. You have to be aware. Now, we do have a bit of a joke, ladies and gentlemen, and we take the mick out of the bull flag pattern and say that, you know, this is Super Mario's castle. That's the Mario flag itself. Mario jumps up over the flag. He defeats the castle. He's victorious for the day. I know we have a little bit of a laugh and joke. You know, we've got to add a little bit of comedy to it all, and we've got to add a sense of humour. But the sad truth of the matter is, ladies and gentlemen, people are relying on this pattern, and sometimes when the pattern doesn't play out, it actually costs people money, okay? And what I'm trying to convey across to you, ladies and gentlemen, is to get you to understand that trading is a little bit more than just waiting for a bull flag pattern. Doesn't make sense. You have to understand what's going on inside of this area here to believe that it's going to play out. You see, when a move like this is happening, okay, you need to say to yourself, all right, so what would I need to see? Well, look, fake outs. This is what happened. You can see that all the bull flag players would have got excited at this point. So they would have adjusted their flags. They would always adjust the flags. Okay? Because you're dealing with the future. So you have to correspond with what's happened. So you can see right here, look, 1, 2, 3, that candle right there would have solidified the bull flag. Traders would have gone in. It would have compressed. They would have said, yeah, let's go. Bitcoin is due for another rally. There's a massive Bitcoin pump. Man, please. If you're hearing it elsewhere, then it's likely already been done. There was your pump. So then what happens? Market maker can sense that all the liquidity is trapped in this range. You can see the previous green vector candle. We've got the psychological high. Happy days. From this point, ladies and gentlemen, we did the stream. Okay? Now, in the video, which we will see right here, okay, you can see this video right here. Bitcoin, if this zone breaks, enjoy the ride. All right? Bitcoin must hold this zone to rise. This video is important because it explains what was happening here. Now, there was a confluence. There was a confluence of the psychological high, the 200 EMA, and price working this range. Now, the idea behind that video was if Bitcoin was to break this zone, it would need to move out, try and take back all of this liquidity here in terms of the wicks, and continue towards yesterday's high. That would solidify the move up. You see, with the bull flag that was presented here, those retail traders would have been shaken out. They may have even changed direction and gone short. But you could have seen with the vector candles that they were holding the 50 EMA. But people would have been shaken out. They hit the liquidity. They came all the way down to the vector candle, recovered more than 50% of it, but they held at the psychological high and the 200 EMA. Go back in the streams and watch every single video that I've done on a Sunday night where we establish these levels. All right? These are the true support and resistance zones in every single asset that we talk about with these lines present. Okay? They take the first high and the first low at the start of every new trading week because they are designed by principle. They set the range for the market maker. So the market maker works in this area. If he trades away from it, you know you got conviction and you know that they've been favoring higher prices from the psychological range, which means that when price does come back down towards it, you could make the assumption that they are likely to bounce away from it because they favor higher prices because of what range they've set in here. Okay? Now, shortly after that video, ladies and gentlemen, the move plays out. Price moves higher. Look at that. Beautiful move. Now, most would say that this was a this was a bull flag pattern that played out perfectly. Well, let's really look at it, ladies and gentlemen. This is on the 1 hour time frame. You would have adjusted your bull flag pattern many instances, and quite frankly, it wasn't really a nice structured bull flag. What were you of the understanding? Like, would you have adjusted your bull flag pattern like so, and then would you have done this? Okay? Would you have drawn it on this basis? Because that wouldn't be consistent now, would it? When you think about it, it wouldn't be consistent. You're drawing from this point here, and that's what I'm trying to say to you. You're always forever adjusting it. A self-fulfilling prophecy. then all you needed to be aware of was the following. Come away from the pattern. And if you saw that the W formation was present, you would have been expecting a rise level 1 retrace and then a rise level 2. You wouldn't have had the need for a bull flag pattern. You wouldn't have had to draw this pattern to determine where they were likely to go, if they were going to break a certain zone or not. You would have said to yourself, okay, I expect from the level 1 rise, a retrace to the 50 EMA. Once the 50 EMA shows support, I'm expecting price to break out from this zone, which is what you need to establish a level. You need to break the previous highs level in order to solidify and move to the upside. So you could have had limit orders up here. You could have put limit orders in this area here, and price was all the way down here. You could have caught yourself a nice move to the upside. But ladies and gentlemen, I wasn't favoring higher prices in the sense where I was expecting the market maker to reverse price, because if Bitcoin can't break above the 800 EMA, I'm not favoring longs. I'm favoring shorts. Okay? And that's what it was. Now, at this point right here, ladies and gentlemen, everyone was saying to me, Tino, look, man, the hybrid system and all that, you can't get them all the time and what have you. But I was short. I was of the basis that they are preparing to mark price down. This is what we were waiting for. Everyone was favoring higher prices. Now, the principle does say we're in level 1, retrace, rise level 2, because that's where the level 2 start zone was. Okay? And then they moved out of the range. But I didn't see the conviction by the market maker to break above the 800 EMA. They spent too much time in this range right here, ladies and gentlemen, playing around with the vectors, playing around with the moving average, playing with the retail trader. The moves are too fast, ladies and gentlemen. Level 1 needs to be fast, yeah, because it's coming out of the zone. Level 2 needs to be a nice progressive rise. It can't happen too fast, okay? You can't go fast on the level 2. Don't get me wrong. If you're already in a trade from the W formation, any move away from the zone, happy days. It doesn't matter whether it's fast or short, or slow. But what I'm trying to convey to you, ladies and gentlemen, is the sooner you see price moving away from a zone, the more chance that they're marking up to prepare to go short. Remember, this is a day trading setup, and this is what I look for. So when I see Bitcoin hitting the 800 EMA 1, 2, 3 times and it still fails to go higher, the blue vector candle holds precedence. Go back in the charts and look at how many blue vector candles appear at climatic points in the chart. We would understand that the blue vector candle means that volume is starting to rise, but it can also imply that volume is starting to slow down. Is the interest not there? If it's starting to rise at the highs, does it mean that it's slowing down at the same time? Because the interest has come here. Yeah? So then we look at what happens next. You see the stop hunt rise, market maker, classic behavior. Solidify the liquidity. It's broken above the 800 EMA, ladies and gentlemen. Happy days. Let's go long. Look, there's another little bull flag right there. So the guys who would have drawn down here would have done this and said, yeah, baby, that's it, man. We're going to go to the upside. Bang. There it is, ladies and gentlemen. Go long, go long, go long. But guess what happens? It pulls back again. They even say, okay, actually, let's just readjust it now. Let's extend it. Let's see what happens. All right. Now, at this point, I'm going short, ladies and gentlemen. I am short. Look what happens. The series of unfortunate events, ladies and gentlemen. The trap has been set. They got trapped in this instance. They may have even readjusted their Mario patterns, their bull flags, and waited for a break again. But this one failed. But what was I thinking in all of this? Because a lot of people were saying to me, Tina, how can you not be bullish, man? How can you not favor higher prices? Because we haven't broken the key zone we need to break from, the 800 EMA. Bitcoin has a history of coming to the 800 EMA and doing something. 1, 2, 3 hits to the high, drop. Even here, limitation. This is what I'm trying to say to you, ladies and gentlemen. It's not about the static patterns that you see in the chart. In a bull run, ladies and gentlemen, every single bull flag's going to work. That's obvious. But the idea behind understanding how these patterns work is when everyone is favoring higher prices and you're looking for the opposite direction and it plays out, That's where you come to an understanding of how the market works. And that's what my goal is in these streams, is to get you to understand. When everyone is pumped about price, you need to sit back and say, hold on a second, there's a problem here. Now, remember, ladies and gentlemen, this is a short-term day trading strategy. Bitcoin could go to 100K in the new year. Cool. I'm fine with that. But I'm not interested in a move from 49,000 all the way through to 57. That's not what I'm interested in. I like to be able to get up in the morning, come to the charts and say, okay, what's the market maker been doing today? Okay. I'm all about the development of how the bigger move plays out. You see, this is what I look for. If Bitcoin is going to do this, because this is what retail traders do. They want to buy Bitcoin from here and they anticipate that Bitcoin's just going to keep doing this. Well, where my work begins is when it does this. Up, down, stabilize, 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 up, down, playing in the range, up and down. Yes, Bitcoin did go back up to that range, but I'm about exploiting these areas here. Why? Because I don't want to leave liquidity on the table, because I understand that the market maker can trick us into doing many things. I can believe that the market maker has a habit of surprising us, like so. When you see these big moves, a lot of people got liquidated. A lot of people were probably trading a bull flag pattern from here. They were doing this madness. Okay? And then when they saw this little bit right here, they said, oh my God, that's it. Bitcoin's going to make a break. Bang. Off they go to the upside. But then you look, market maker initiates 2 stopping volume candles, stop hunt rise, pulls it straight back and changes the direction. Why? Because everyone visually is trading a flag. Do you see what I'm saying, ladies and gentlemen? This isn't to ridicule anyone that's using the patterns. If anything, I'm trying to get you to have an awareness and understanding what's going on with these patterns. Because these patterns, okay, by nature are designed to trap you. Okay? Now, I shared a projection over to the guys involved in the masterclass. And this is what it was. My first projection was the 49,680. And we hit that. And we hit that to the T. Just a little bit off, really. It landed 49,680 was the first projection. And price came to the 49,616. So, yeah, it hit it, but it went over a little bit. But that was where the turning point was. Why? Because it recovered more than 50% of the vectors. They already hit the liquidity zone. And what do we expect them to do in the liquidity zone? Bounce away from it. See, my entry point was the 50,897. That is where my entry point was on what we would understand this bit to be. The FTD zone. Now, the FTD zone itself is a point in the chart where the dealer or the broker, market maker, whatever you want to call it, okay, initiates traders to believe that one thing is happening when really he's setting up for another. Do you see what I mean? Price comes back down. Bounces off the 50 EMA, consolidates in this range and makes the retail trader believe that we're getting ready to bounce off the 50. Happy days. Stop hunt rise. Fails to break above the previous high. Retrace. That's what this is about, ladies and gentlemen. The clues were there, guys, when price was hitting the 800 EMA. Now, if you exploited this move to the upside, I really hope you paid yourself. Congratulations. But if you're still holding on to trades believing that Bitcoin's going to go higher, guess what? It may go higher. But it may go lower before it can go higher. And that's what it's about, guys. It's about getting into the habit of paying yourself frequently. Okay? Mad love and respect for watching this, ladies and gentlemen. And again, I want to say, to people that are trading with these bull flags and what have you, proceed with caution, ladies and gentlemen. Because if you're having to readjust the flag itself, then you know the structure doesn't really work. What would you use instead? Understand the relationship with the vector candles. Understand what is the market maker trying to do above this zone. Take the key 50,000 zone, 51,000 point right here in the chart. You can see it right there. 51,000. Building the shorts above key notable areas. How can you break above the 51,000 zone with no conviction? The blue vector candle's there to trigger on the 800 EMA orders. Someone came in the stream only a couple of days ago and says, can you tell me what the 800 EMA moving average is, what price it's at? And I read the price out. And I was like, man, Millions of traders do that. They set orders above and below this area, which is why the market maker spikes them. Look, 1, 2, 3. Because people set orders on those zones because they have the belief that if it can break above the 800 EMA from all the way down here, it means it's got strength. Bitcoin may have strength, ladies and gentlemen, to move higher. Okay? If this move is going to be valid as a level 2 rise to the upside, so we expect this from this point right here in the bigger cycle, that we expect Bitcoin to move higher from this point. Well, I'm going to always exploit the retraces, ladies and gentlemen. Because when market makers moving up, I'm preparing for them to go down because they need to realize a return on their positions that they've played from this range. I hope this video serves you, ladies and gentlemen. Okay? I really do hope it serves and that you get what I'm trying to convey here. I'm not saying that the patterns themselves like bull flags don't work. They do work sometimes. They work in bull flag, they work in bull runs. But the idea is to be aware that when they're in, or when you believe you're in a bull run, what would you need to be aware of to understand if this is going to fail or not? And that's what the hybrid system does, ladies and gentlemen. And that's what we talk about every single day in the streams. Okay? Mad love and respect to every single one of you. Thank you for your time and allowing me to chew your ear off. Have yourselves a wonderful day. Take care of yourselves. Peace.